Hello everybody, welcome back to the channel, and today we have How I Trade SPY Options Part 2. This is Part 2 of a multi-part series where we discuss how I trade SPY options and everything around that. Now, if you're new, this channel basically talks everything about SPY options and how to trade them. We have a whole community. Link is in the description for the Discord. If you're interested in trading SPY options, I highly suggest joining the Discord, and you can interact with people just like you there, share ideas, and go through the SPY trading day all together. Also, consider subscribing to the channel so that you get notified whenever I release SPY recaps, these videos, and everything about trading SPY options. Now, without any further ado, let's get into it. So what will this video be about? So for starters, in the last part, in part 1, if you still have not seen that, I highly suggest watching that before going on and watching this part. But in the last part, I briefly mentioned my A+ setup. I quickly discussed that it's, a sort of break and retest strategy, and it's my favorite strategy to use, especially on trendy type of days. When the market is making, a move up, a move down, a solid trend, not like a rangy day, not like a very choppy day. When we have a pretty solid trend, I really love using this strategy. And in this video, I go deep and talk about everything about that specific strategy. In the last video, I kind of discussed overall trading and how I approach it, the way I chart support and resistance levels, all of that. And in this video, we'll use all of that information for my A+ setup. So this video will also discuss how I set profit targets and stop losses with this setup, because that is very important in order to stay profitable with this system. I will also talk about trade examples, show you exactly, the way this kind of setup worked out in the past on the chart. And then I will discuss exactly why I really like this setup. And I think it's great for, beginners, intermediate, and, advanced traders, because, I'll discuss that later on. So before we, get into the specifics, again, if you haven't seen the previous video, this is, something I show it at the end, which is kind of the basics of the system. It's a break and retest type of strategy where, if we create a support level, we break it, then we're looking to see that support level right here get retested as a resistance, where we would have entered some put options and ride them down. That's kind of the basics of the strategy. And then we'll be, later on in this video, I'm going to be now discussing all the specifics, because it's not just a simple break and retest. Okay. So let's get into it. My A+ setup, everything you need to know. So I call it the patient pot shot. That's the way I call this strategy. But that really doesn't matter how you call it. But I want to briefly discuss why I decided to give that kind of name to this strategy. So this strategy involves, as you probably, could probably infer, some patience. You need to wait for your setup to come, and you need to take that setup when it comes. You need to patiently execute, okay? Now, if you guys don't know what a pot shot is, it's basically like, a sniper. You got to really hit the target. You got to execute at a very specific moment of time, and, you have to act at a specific moment of time. You cannot hesitate, but you also need patience. So that's why I call it the patient pot shot, okay? So the basics of how it works, I will go on the chart later on and discuss it in more detail. But basically, you chart your support and resistance levels. Now, if you don't know how to chart support and resistance levels the way that I do, and you will not know how to do that unless you watched my previous video in this mentorship guide, or you just, all my other videos and you watch my daily recaps, I chart my support and resistance levels at the bodies and the wicks where most of the time the price has changed direction. So if you don't know what I'm talking about, make sure to go and check the part 1 of, this guide. So then what I do is I wait for a break below a recent support level or above a recent resistance level. Then I take my trade off of the retest of that level. So for puts, for the downside, I'm looking for a break below a support level and a retest of that support as a resistance for the downside. For calls, for the upside, I'm looking for a break above a resistance and a retest of that resistance level as a support level, okay? Then I'm going to talk about the only indicator that I ever use. It's called VOL on TradingView, the default volume indicator, which just tells me how much volume each specific candle has, how much money is involved in that specific candle at that specific time, helps me understand what the likelihood of this move continuing in the direction that I'm looking at, okay? So what I want to do is I want to verify that volume is greater on the candle that breaks through the level. Okay, on the candle, pay attention to the words that I'm saying. On the 1 minute chart is greater on the candle that breaks through the level than on the candle that retests back onto that level. So if we're looking at puts right here, then I would want to see on the retest of a support level as resistance, I want to have a less volume than on the candle that initially pushed us through that support. Now, if this is a little confusing, I'll clarify it right now, okay, in the next couple slides. Now, something that is very important, and this is probably like the biggest difference between my break and retest kind of strategy and every other one out there. I only use the last most recent level to get entries from, okay? So if we created a support level 2 hours ago and we've, moved between it, I'm no longer looking to get puts on the retest of that support as resistance. Okay? I'm no longer looking to do that, at least not for an A+ setup. Okay? And, some people like to use this system and kind of go away a little bit from the, the base rules and say that they're going to put a little less money on it and play more of a B+ setup. I personally don't like to do that too much. I like to play the core A+ setup, taking less setups with less risk. I don't want to take 10 trades every day with, ranging from C+ setups to A+ setups. I don't want to do that. I'd rather take 2 A+ setups and be much more confident in my result. Okay? So, profit targets and stop losses, very important for any system and especially, for this A+ setup. Now, in the previous video, I did discuss that this needs to be decided, your profit targets and your stop losses, before you enter your trade, okay? Not when you're already in your trade, not when you're panicking because you're down on your trade, not when you're in profit on your trade, before you click that buy button, okay? Because you need to have a specific plan before going into the trade, and then all you have to do is you execute that plan. And if your plan originally doesn't have too big of a stop loss, the worst thing that can happen is you just lose the amount of money that you decided on before getting into the trade. So don't decide on losing more money than you want to or are allowing yourself to before entering the trade. Okay, don't assume that your trade is just automatically going to go in your favor. Assume that it will go against you and make sure that you're okay that it will go against you, and understand that if you have a good system in place over time, over the long run, you will be in profit. Okay? I can't guarantee what's going to happen in the next, year or months. I can look at past knowledge and I can see that this system works if you play it the right way. So, your stop loss is a close above or below the wick of the candle that went through your level. Okay? So it's the 1 minute candle, a close, you need the candle to close above the wick of the candle that went through your level. So if you have, a resistance, you have a wick that goes through, and you have, and you played, so you're playing calls, okay? Through the resistance, a retest as support, you're playing calls. If that wick has a support wick, that would be your close if it breaks below that support. Profit targets are just major support or resistance levels as your trade goes your way. Okay, so you need to be taking some amount of profit as your trade is going in your direction. If you took 5 SPY call options, okay, and your trade, SPY has risen 30 cents, and there is a clear support level, and you're in calls, let's say, that could, reverse and go down, at that, you need to be taking some amount of profit there. And then your main target, where you're taking everything, your entire profit, should be a major level of past direction change. So even if you're in calls, you're not looking to only take profit at resistance levels. You're also looking to take profit at previous support levels, because we know that old support can turn into new resistance, and old resistance can turn into new support. Okay? So now let's just discuss a couple of examples. Okay? So this is one of my favorite examples to show. This is SPY. All right? We have a clear, resistance right here, and right here. Okay? Now, why do I put this resistance level right over here and not on that wick or something like that? Because I look at the most recent level. This resistance is a little more important than this, which is why I won't put this resistance right over here. Okay, I will put it at this body and that wick. Okay, then we break above, we retest, okay, come within 5 cents of this level, and we make a move up. I always want to see the candle come within 5 cents. Whenever we come within 5 cents of this level, I take the trade. I don't wait for confirmation for the next candle to start printing. I take the trade the moment we hit my line. So I would be taking calls right there. Now, there are exceptions for this rule. If I see a massive, push down, like an actual bleeding of the candles, or, an absolute rocket for the upside, I'm going to wait. But if I see that it's kind of, coming down, it's kind of bouncing, it's wicking off that level, I'm going to be looking to get into some calls right here. Another example, okay? A little more, complicated here, but I just wanted to mark this up to show you guys. So we have a clear support level. The most recent support level is right here. It's not, this level right here. This is the most recent level that happened right here. Okay? At the bodies and the wicks. It doesn't have to be exact, but, it has to be somewhere there. Now, we broke through. I'm looking at volume, okay? There is more volume on the initial candle. This is the initial candle that pushed us through that support level. This is the candle that made that move into this zone, okay? We moved through. We had more volume marked by this yellow right here. This is the volume indicator. We had more volume right here than on the candle, this green candle that went back up to that previous support and retested as resistance. So what this logically means is we have more sellers below this support level. So logically, that would mean that we are more likely to move down after retesting this level as a resistance. So then you would want to be selling some parts of your puts as you're moving down, because there are tons of support and resistance levels from this move. And this support level would be one of your main profit targets, because we previously double bottomed from there and moved up. Okay? You could always leave some runners after that and, sell whenever you want. But at this point, you would have needed to sell at least 90% of your position. Okay? I'm not a person that tries to get the 100% bangers or the 1000%, bangers every single day like a lot of these people claim they do. I want to get good, low risk, planned profits where while I'm in the trade, my heart is not like going absolutely crazy. I don't feel like I'm getting a heart attack when I'm in the middle of a trade. Okay? So this is just, I wanted to show you this to show you guys when volume helps you. So we have a clear resistance right here. This is the previous, level right here. We had some volume right here on the move through that resistance. And then look, on the way down, we have a small candle with more volume right here. You see this right here is bigger than this. It is marginal, but it is bigger. And this candle is like 5 times the size of this candle. Think about it logically. If you have a massive candle with low volume, that means that that massive candle has no buyers behind it. It's like empty calories, okay? There are still calories, but they're empty. They don't have any nutrients behind them. This is an empty candle. It has a massive size, but it has no buyers, no volume to back it up. On the other side, we have a small candle, okay, with a little bit more volume than that. Which means proportionally, if this candle would have like a much bigger size, you would be expecting even more volume, okay? So this is why I would not take a trade right here for calls, okay? So yeah, that's just, a couple of examples I wanted to briefly touch. So now I'd like to go on to the chart and discuss, a couple of trades right live on the chart, after which I will go on and discuss exactly, why I really like this setup, and that will be the end for this video. Okay, so let's switch to the chart. All right, so I got the chart pulled up right here. This is SPY on the 1 minute time frame. Okay, I always trade on the 1 minute time frame. I got the volume indicator on right here. We're ready to go. So one thing I do want to mention that I didn't do yet is I never take one candle pullbacks. So you can see right here we have a resistance level, okay? I put them on the bodies right here and some of these wicks. The most recent resistance level. I want to see a push through and then a retest. What I do see here is I see a push and I see a retest with one candle, okay? This is not a trade I would take for calls. Now, even though this did work, okay, in your favor, I don't just show trades that don't look and go in your favor and say that I would not take them. I show you the reality. Yeah, there are trades that go in your favor that you would not take, but most of the time, if there are one candle pullbacks, you will notice this, the trade does not go in your favor. Or if it does, it goes in your favor very quickly, okay? If you see right here, we had a one candle pullback and then we rejected right here and went down. I don't like taking trades like this. This does not qualify as A+ for me, okay? Now, the way I do my stop loss, what I said is my stop loss is the wick of the candle that pushes us through the level. So this candle right here, this green one, is the one that pushed us through that resistance. This is the wick support. So this right here, a close below that wick would be my stop loss. If that's a little too risky for you, okay, you can use this resistance right here. So you can use the previous candle's resistance candle wick, so that, or for the downside, the previous candle's support wick, okay? But usually the rule that I go by is the wick of the candle that pushed us through. Now I want to just show you a quick example of a trade that I took, and that you can take. We have a clear resistance level right here. We push through this level with 77K of volume, okay? Then we create a good rejection right here, a very clean pullback, and then this candle is the one that touches back to that level, only 42K volume. And I can see the volume up here in this indicator, so pay attention. When I hover over this candle, you have 42K volume. Less volume than on this candle. Nice place to take some calls. My stop loss is a candle close below right here. And I would have sold some calls at this support because I know that this support can turn into resistance at any point right here. So I am selling some of my calls right here. Okay? Then could hold some more and then sell at that support. Would have been a pretty nice 10-20% trade if you took it, okay? Just a nice little example to show you guys. Another example, okay? You could have taken calls right here. We have a clear level of resistance. Let me just adjust this. At the bodies right there. We break through that area with this candle. You could argue it's this one, but one of these. We have 122K volume. On the candle that comes back and touches that level, we're looking to see that level make a support. This level has has 70K volume. That's less than 122. You take calls right here. Where would you sell? If you look right here, if you're looking to the left, where do you see the most closest support or resistance? Right here. Okay? F4, 11, 14. So you would sell some of your calls right here. Now, is your stop loss ever triggered? No. Our stop loss would be this candle pushed us through. That's the wick or whatever, the body. There basically has no wick right here. That's the stop loss. A close below that level. A close is when the body of the candle closes, not the wick. Okay? So, none of this would stop you out. None of this would stop you out. You would stay in the trade. You know, if you wanted to just sell right here, you could have sold right here. Okay? But if you wanted to, you could have rode this trade all the way up to the very top. Okay? And had a very nice trade. You would obviously not hold your full position right here, but let's say you would sell, 25, 30% of your position right here. I'd probably sell another 10% right here. I'd probably sell another 10% right over here when I saw we're going back down. I would have held through this. Okay? Then right here, I would not sell everything because this would be very similar to this price. Probably less because of the time, the theta decay. I would just held through this chop. At this point, theta would have probably eaten up your contracts a little bit, depending on how, which kind of options you took, if you took 0DT or not. I almost always take 0DT, but, it's your choice. I just like to take quick profits, and my trades are very quick in general, and 0DT allows you to do that. Okay? But at some time around this point, I could have been holding another 25% runners. My trades would have been a solid, most likely 50%, up. This would be a very solid trade. Okay? So these are just two very quick examples I found on some very recent days on SPY. Okay? There are tons of examples if you want to go dive into the chart. I have more examples on my SPY How I Trade ebook, which you can, if you join the Discord, you can purchase. I will most likely be doing some more free giveaways very soon, so be looking out for that. Okay, so let's go back to the presentation. Okay, so let's just quickly talk about why I love this setup so much. So first of all, it's easy to spot. Okay, you literally just have to chart your support resistance levels, look for breaks above, below, look at the volume, and take your trade. You don't need too much information to take your trades. But despite being easy to spot, most people don't do it right. Most people try to take trades that don't align to their rules. They don't look at volume, and they don't chart their levels the right way, and they let their stop losses run too much, and they don't take profits when they should. Okay? So if you do this trade right, this type of setup, it can be very lucrative. Okay? Also, this trade setup is very easy to not overtrade because it doesn't happen every 5 minutes. Okay? You're not going to be seeing these types of setups every 5 minutes, which is good. You don't need to take more than 3 trades a day. Okay? Great profits. If you're able to scale properly, the profits on these setups can be massive because you're playing the trend. These setups happen usually on trendy days, which does mean on a choppy day, you don't want to use this setup. Okay? I have other setups for choppy days, which I will be discussing in, further parts of this mentorship series. So if you're able to scale properly on trendy days with this setup, you can get very good quick profits, and you can get very good profits on your runners. Okay? Finally, the logic makes sense. I always like to do something that makes sense. I like to trade something that logically makes sense to me. If an old resistance does turn into a support, what that really means is there were sellers there before, okay? And now there are buyers and vice versa. This makes sense, okay? So that's basically it for this video. I really hope you guys learned my A+ setup, and you guys can take this further and learn from that. But, that's it for this video. Again, if you want to learn more about this, make sure to join the Discord community in the description. Also, make sure to subscribe to the channel. Smash a like, really helps out. We will be having the other parts coming out probably soon too. I am very busy currently, but I'm trying my best. And, thank you guys all for watching, and I will see you guys in the next one. Peace out.